I think we're recording, so good. Okay, so I guess I just we could start as usual if there's any kind of questions, broad questions about things. I guess I could start with an apology. I did not put any feedback on exam 2. I did meet with a few people who wanted to talk more about some of the concepts from the exam, but I didn't get anything else additional put on there. So for the 5 or 6 of you who actually look at that feedback, I apologize I didn't get it on there. But I'm still more than happy to if somebody wants to talk about some specific items from that. Except now our brain's already on to exam 3, right? Like we're already nervous about that. So anyway, so any questions about general issues, I guess, or before we get into talking about specific, content from this week?
So I don't know if anyone else has noticed this, or if you have noticed this in the past, Brother Fox, but I am observing that each quiz has a little curveball they like to throw at us. So they'll take the principles we've been learning, but then give us something we've never done before. And so sometimes it can be a little tricky. This week it was, for me at least, it was you know how you do the FIFO, the LIFO, the weighted average, and the, what's it called?
Specific identification.
Specific identification, yeah. In one of them, they kept out like the beginning inventory. So you had to just figure out the purchase ones, which really threw me for a loop because all the practice ones we had kept, including the inventory, beginning inventory in it, and then trying to figure out just the purchase part. That was a little trickier for me.
Right. And instead of asking like for cost of goods available for sale, they asked for cost of goods purchased, a term that had not been used before. Right. And so, and like, once you figure it out, you're like, oh, okay. But like, I really think, and I know if I were a student, I would not appreciate it. From a teacher's
it's not appreciated.
From a teacher's perspective, I do love that they sort of like, they'll kind of start with some that are kind of straightforward and then hit you with a curveball that really kind of digs in and says, do you understand what you're doing? Because at least when I was a student, I could sometimes like get through the homework but still not feel like I had a deep understanding of the material. And I feel like something like that makes me have to think about it from like a different angle, and it helps me understand it. But I would not have loved that as a student. So I will commiserate with you, but but the other thing that's weird about the BYU classes is like I have zero choice over the content. So like I teach for ASU, and they're like that's Arizona State. They're like, we don't give you anything because you're the faculty member, so you develop the whole class. And you're like, oh, okay. Like I wish I'd known that a little more in advance. I would have developed this. And then at like BYU, they're like, no, we have laid out the entire content for you. You're just sort of facilitating the students. You're more like,
you're the warm body, dude.
So yeah, well, I hope it's more than that. Like, but yes, so no, but like really, so it's like radically different. And so like when someone's like, I hate this, all I can be like is, I'm sorry, like I don't love it either, which isn't really comforting. when anyway, like the most I can do is and we have kind of like a group chat with all the instructors saying, hey, this one's really hanging people up, and not in a good way. And then they take it back to, they have what's called a course council, which has faculty who are like the lead faculty there at the main campus, plus an online faculty member, plus a course designer, and they discuss it, and then they make changes, updates once a semester. So that's the process. So if there's ever something that's like, I hate this, let me know and I'll let them know. But
okay, I'll send you an email so it's not taking our precious 1 hour time. But I just wanted you to know there was another curveball.
yeah.
In case you didn't already know.
Yeah, no, because I helped a couple of people with that one because it is a little bit confusing. So other questions or problems we want to look at, or I feel like sometimes
You had sent me help on number 9
uh-huh.
of the quiz, and I am still really struggling with it. Like just grasping like how it's wanting the errors to be fixed and adjusted, and it is just difficult. But if you want to do it at the end, I'm perfectly okay with that. I was just needing further help on that one.
Okay. Well, sometimes I do like a little lecture piece, and there's a part of me that feels like that's wasting time because we have those are all recorded, right? And people can just look at them. So I don't want to spend a ton of time there unless somebody would, so I would almost defer to if somebody's like, there is a concept that's just killing me, or a problem like that number 9 that we could look at, I would almost rather do those things first. And but so we can definitely look at that. Any other like things that are really hanging people up this chapter?
I would
have a
add
question.
number 7 on that quiz because that's the one that started throwing in the cost of purchases.
Mm-hmm.
So if you have time for it, but let's start with 9. That's a great idea. Did you have
Okay.
something, Millie?
Yeah, it was just actually, are you the one that did the homework video? Did you do a homework video?
Yes, I'm so sorry.
No,
I
that's the
think I
problem.
must speak backwards from other people because that's just the way I solve things.
Well, no, I can't even watch it, so I'm not exactly sure.
Oh, really? Because I clicked on the link last night and it worked.
Anyway, that's the one I have a question on, and I think I'm just missing something because I have like it's number 6 on the quiz access.
Okay.
So I have all the numbers right, but then the next requirement is which method yields the highest net income.
Mm-hmm.
And what I think it is marking, it's getting marked wrong. So.
Okay. And then the short answer is it's the one with the lowest cost of goods sold, right? Since that's the expense.
That's what I put, but it's marking it wrong.
Okay, so we can.
I don't know. I screenshotted
my
my answers and sent them to you, Brother Fox. So
okay.
And we don't really need to spend time on it. Like I understand how to figure it out and stuff, but I don't know if I don't know if you can just look at that sometime.
Right.
And
well, I hesitate to put this out there for fear of the deluge that could flow forth from it. But I do have one student in this class who is having stuff marked wrong. And then when I pull it up on my end, it's showing correct. And he has 100%, but on his end, it's showing wrong. And so, so the reason I hate to say that is because now everybody who gets one wrong is going to think, oh, it's marking mine wrong, but it's actually correct. And I'm going to have like 30 of them to look at, and 29 of them will be like, no, that's actually wrong.
That's actually wrong.
And so I'm like, but just so you know, that did happen to somebody. Like we spent a long time trying to figure that out. So I can pull yours up maybe after the class or after the meeting and look and make sure it's not something weird like that.
Okay, yeah, I don't know if I just like put the numbers in Excel and sorted them. I'm like, am I looking at the number wrong? Am I like, but when I check my work, and now I don't have any more check my work because I checked it 3 times, but all the numbers were correct. And the number that's the lowest cost of goods sold is not.
I had the same issue and the same question.
Okay, so
you do?
I do.
Okay.
We'll take a look at it. Like I would never claim that Mcgraw-Hill is a perfect product, but I would say it's pretty good. Like it's rare that we find an error, and then when we do, we report it. So we'll definitely check it out. What's happening right now is I'm talking, but I'm actually pulling up Mcgraw-Hill Connect so we can take a look at that and number 9.
Melly, thanks for bringing that up because I clicked on that last night after I posted it and it worked fine, but now even I have access tonight. I'm not really sure why. So I'm going to run on for you. I'll get that back up.
Let's see. I learn.
So are we talking about number 7 on the quiz access?
Number 6, right?
Yeah. So I had it work fine for me.
Yeah, let's take a look at it. So let's see who,
I know we get different numbers, so our answers might be
Right.
different, but
so Melanie, is it okay with you if I go in through the back end and pull up yours and other
Yep.
people see it? Okay, because I don't want to show
yeah,
other
I
people.
haven't submitted it yet, so.
Okay, yeah, I'll go into where it says, the only back end I have is I can see when people's stuff is in progress. And then I can look at like what they've marked so far.
Yeah, that's fine. Go ahead.
But I don't, but now I'm having McGraw-Hill is not loading, so that's cool. There it goes. Oh, it just took a minute. I love how we're like, you know, if something takes more than like 12 seconds, we're not even 12, like to load, like a couple seconds, we're like, this is ridiculous. Like you have access to information from around the world and it takes more than 4 seconds and you're mad. Or as my granddaughter says, it's woting, Grandpa. It's woting. It's usually on her videos. Let's see. So chapter 5. Quiz access. And then we're going to look at, sorry, this is a little slow loading. Come on, there we go. Okay. And finally to your assignment now, number 6.
Hey, Melanie, I just tried putting that link up again. Do you mind checking it for me, see if you can access it?
Sure.
All right, I got it up. So let me share my screen. Especially if multiple people are having similar problems, right? Like we need to get to the bottom of that. Let's see, there it goes. It's just going slow. And can you see my screen?
Not yet.
It's
No?
a lovely shade of black.
Okay.
There it is.
Okay, it says I'm screen sharing, but it's being really slow.
It's good.
Okay, so here we are. All of the numbers are good. Then we go to requirement E. That says which one yields the highest net income. So let's take a look. So we can see that on your specific identification, it has the lowest cost of goods sold, but it's saying first in, first out is the correct answer, I think. Let's double check what it says. I bet you wish you had a show correct answer button like me. All right, first in, first out. So here's what I think is happening. I'm going to report this is on the other persons that we worked on, first in, first out did have the lowest cost of goods sold. And so I think there's probably an error in their algorithm that recomputes different numbers for everybody. And for some people, specific identifications coming out with those. So you're not crazy, you did it right. It's just being, I think the technical term is it's being dumb.
Okay. Well, I'm
So
glad it's being dumb and not me.
right. So I'll have to manually adjust your grade, and it actually won't let me do that. So until it's submitted.
Okay.
If
And
you
so-
haven't submitted it, you could probably still put it as FIFO and then submit it and it'll be right after that.
Right, if you still have another thing. Otherwise, and I guess I'll just have to put that out there on the video. If you're having an issue, if you already submitted it and it wasn't working, email me and let me know, and I'll update your grade by that 2% or 1.6% or whatever.
So
it
I
is.
haven't submitted it. So should I just change it to the wrong answer?
No, change it to change it to first in, first out.
All right.
You can't say things are wrong in this world, Melanie. We have to say they've come to a different answer. No, never mind.
Okay.
You're like, no, this is math. That's actually wrong. All right.
Okay. I'm going to submit it and see what it does. Well, I'm going to make sure I did all the problems first, but okay. Okay. Thank you for checking on
Yeah,
that
I'm
one.
sorry. And so I can go in on my end and I can actually submit like a little fix it to McGraw-Hill that says, hey, we noticed this problem. And usually like a
Okay,
month
I
later, they
changed,
send me something.
I just changed it to the other answer and got it right, so.
Okay. All right. So for those
Okay,
of
thank
you
you.
watching later, take note. If you still have an attempt, change it to first in, first out. And if you don't, send me an email and I'll go in there and manually update your grade. Okay, anything else in the, before we go to the quiz, I guess, anything else in the quiz access? You said number
9.
well, that was in the quiz access? No, that's in the
No,
quiz.
the quiz.
Right. Anything else in the quiz access while I'm still in it, I guess, is worth looking at. Okay, let's take a look at the quiz then. I'm actually going to go into preview, which is like the teacher view instead of an individual's. And again, it's just really slow loading. Or maybe I didn't click it well. You said number 9, right? Yeah. Okay, so I will admit I do not love this problem. It's a little challenging. So what we have to do is sort of like talk ourselves through this. So this is on mine, it's called Navajo Company, not Navajo, Navajo. Actually, where I'm at right now, we're right next to the Navajo reservation. So interesting that would come up. I know, not that interesting to you, but to me, maybe. Navajo Company's year-end financial statements show the following. The company recently discovered that in making physical counts of inventory, it made the following errors. Year 1 ending inventory is understated by 58,000, and year 2 ending inventory is overstated by 28,000. Then they give us all of this information. And so then they want us to, for each key financial statement figure, prepare a table to show the adjustment necessary. And they have laid out a table for us. And then what's the total error in combined net income for the 3-year period? Okay, so for that first line, reported amount is just the amount that's given to us for cost of goods sold right there. So you can see those are the same amounts. And then it tells us that our ending inventory is understated by 58,000 in the first year, which means that our ending inventory is 58,000 less than what it should be. That's what understated means. Okay, so to correct that, we're in essence going to have to add $58,000 to our inventory. And since we use our ending inventory, to calculate our cost of goods sold, we're going to have to make an adjustment of negative 58,000 to our cost of goods sold. So does that follow, or is it still like I get that you're telling me that, but I don't really get why?
Wait, are you saying that on the understatement amount that you put that in as a negative?
Because we're adjusting our cost of goods sold, we're not adjusting our ending inventory.
Oh, got it.
Are you subtracting? I just want to make sure are you subtracting it because we thought we sold it, but in reality we didn't actually sell it. So now we need to report that on our income statement that is not actually accurate.
Correct.
Take that amount off. Okay.
Yep, we're correcting the amounts. And this process we're doing right here, this little table they're having us do, we're not actually doing the adjustment yet. We're calculating the amounts. They're wanting us to be able to figure out the amounts. The adjustment would look like a journal entry, right? Or the correction. So again, so if we understated our ending inventory, so right here, because remember that we calculate our cost of goods sold by taking our cost of goods available for sale and subtracting our ending inventory, and that gives us our cost of goods sold. Okay, so if we understated our ending inventory, then we would have overstated our cost of goods sold. So the correction is to subtract or reduce from our cost of goods sold. I know saying the words sometimes just makes it sound more confusing. And then our net income. So let's see. There was a reported net income of 276,000. So we're actually, if we're reducing our cost of goods sold, which is an expense, that is increasing the amount of net income. So there's our adjustment for the correction, is an addition of 58,000 to the net income. And then our reported current assets. So that's given to us here. So I'm just going down year one. And then our adjustment is we're going to add 58,000 to our current assets. Because remember, our inventory was understated by 58,000. So to correct it, we're adding that 58,000 back in.
So because it's under inventory, then cost of goods sold and no, cost of goods sold needs it has to be taken out of, but both net income and assets need to be added.
Correct.
Got it.
And we're going to make a positive adjustment to our equity as well. And that's because our expenses, our revenue minus our expenses, so our net income impacts our equity, right? So if our net income goes up by 58,000, then our equity is going to go up by 58,000. So kind of to recap how this is set up, each of these reported amounts are given to us right here in this table. And then the amount of the correction for an understatement of 58,000, okay, is that we're going to subtract 58,000 from the cost of goods sold. And we're going to add 58,000 to the net income, add 58,000 to the total current assets, and add 58,000 to the equity. That's how that correction is going to sort of flow through all of our accounts. And the good news is most likely your numbers, even though they'll be different, will be similar. Like you'll still have an understatement of ending inventory up here that you have to adjust for. Okay.
Can you do year two?
Yeah.
That's...
So now into year two. So recognize that, let's see. Table adjustments and the report amounts with total error and combined net income. All right. So in year two, now you're going to see that these adjustments we made in year one are going to lead to us having to correct year two as well. Okay. So the correction in the second year is always the opposite. Okay, so if we took 58,000 off of cost of goods sold in year one, now we're going to have to add that to cost of goods sold in year two. Here we subtracted, or we added 58,000 to net income in year one, so we're going to subtract it in year two. And the reason is, okay, this is going to be a little confusing, but the reason is our ending inventory at the end of year one is also our beginning inventory for calculation purposes for year two. So making that error at the end of year one flows over or rolls over into year two. And you'll see that by subtracting 58,000 in year one and then adding 58,000 in year two, now we're back to even. It all matches up and we won't have an adjustment for it in year three. I know that's a little confusing. So you'll see that but for the current assets, we're not going to need to do that adjustment. And for the equity. And that has to do with the fact that these first two accounts, cost of goods sold, and then net income, which is revenue minus expenses, those are all temporary accounts, right? They're getting reset back to zero. So when we reset cost of goods sold back to zero at the end of year two, now we're off again and have to adjust for that 58,000 in year 2. When we reset revenue and expenses back to 0 at the end of year 1, now we were off. So what we had it based on was off. So we've got to make that adjustment in year 2. But for our current assets and our equity accounts, those are permanent accounts. So that will just keep going forward. I don't know that that's a great explanation of it. So I'm afraid I'm confusing people more. So here's what I always say: when you're learning about something, learn the what first, and then the why will sort of like flow along after. And so the what is for our cost of goods sold and net income. Since we had adjustments of negative 58,000 for cost of goods sold in year 1, we're going to have an adjustment of positive 58,000 in year 2. And we had an adjustment of positive 58,000 for net income in year 1. We're going to have an adjustment of negative 58,000 in year 2. But we won't have those year 2 adjustments for the current assets or the equity. So that handles our first error, the understatement of 58,000 from year 1. Our second error is our year 2 ending inventory is overstated by 28,000. So here we've found this error that we're showing too much inventory. Just so you know, in real life, usually when inventory is off, it's usually because of shrinkage, like theft or breakage of inventory. It's where you count it up and you think, oh, I should have this much, but I only have this much. Anyway, so for year 2, if we have an overstatement of 28,000, that means we're showing too much ending inventory. We're going to correct that by adding 28,000 to our cost of goods sold, subtracting 28,000 from our net income, subtracting 28,000 from our total current assets, and subtracting 28,000 from our equity. So the good news is it does behave consistently, right? In year 1, when we were understated, we corrected by subtracting, adding, and in year 2, we're overstated. We're going to add, subtract. And then for our cost of goods sold and net income, we're going to roll that into the next year. So an increase of 28,000 in year 2 is going to lead to us taking a decrease of 28,000 in year 3. And a decrease of 28,000 in year 2 is going to lead to us taking an increase of 28,000 for net income in year 3.
So why doesn't that affect the total current assets and the equity?
Because those are permanent accounts, the balances of those accounts just continue on into the next year. So there's no additional error to correct. Once we make one correction to it, it's got the correct balance.
It's done. Okay.
Whereas here we take cost of goods sold back to 0, but then the fact that our count was still off, it's going to throw us off again in the second year because we're starting with a bad count.
Okay,
Does that
makes
help
sense.
a little?
Yeah, because those 2 are zeroed out, whereas the other 2 are continual.
Yeah.
Okay, thank you.
Yeah, I apologize if I sometimes you try to, it's like, again, when someone tries to explain a board game to you and you're just more confused by the time they finish. That's my teaching style, be as confusing as possible. What's your teaching style? Just incoherent babbling, I guess.
Brother Fox, I do have a question.
Yeah.
Sorry, I'm like trying to use the book and also trying to listening to you. And I'm getting myself even more confusing. So it's definitely not you. So in the book, it shows the ending inventory when it's understated, cost of goods sold are overstated, and then income's understated, correct?
I'm sorry, repeat that.
In the book, it shows that when ending inventory is understated, cost of goods sold are overstated, and net income is understated. So
right,
over cost of goods sold go up, and net income goes down.
Right.
So in all curiosity, why is it that in the problem here in year 1, we are understating or we're putting less on cost of goods sold?
Right.
When the chart says that, I'm just curious.
Yeah. So we're not understating. What we're doing is correcting it. So because cost of goods sold, because inventory is understated,
Gotcha.
then our cost of goods sold would be overstated. So to correct it, we're going to subtract
Gotcha.
to bring
Okay,
it back to the correct.
got
Yeah.
it. Got it. Okay, that makes sense. Sorry. Okay, that's it.
No. Did I mention at the beginning of this that I wasn't a fan of this problem? All right. It's
How do you do
confusing.
the second part with the net income thing?
What do you mean this? How do you do
The
it?
requirement too.
Oh, okay. I was like, so let's look at it. So requirement 2 says, what is the total error in combined net income for the 3-year period? And so the answer is, so since our net income, in the first year, we added 58, and then we subtracted 58, and then subtracted 28 and added 28, the combined total error is 0. So by the 3rd year,
They're throwing us another curveball.
we've corrected it. Does that make sense?
Yeah, I was confused because I was adding the original amount and then the other amount, and they were coming out equal. So I was like, now I don't know what to do with this.
Right. Yeah. Well, because honestly, the first time I read this, I was looking for total net income, and then I had to read it again. It's like, no, it's the error in total net income. So I tend to do that where I'll read something real quick and be like, oh, and throw it in there, and then it's wrong, and I'm like, I hate McGraw-Hill and its face, or something like that.
That's how we feel every question, Brother Fox, just so you know.
We should drive down to their headquarters and beat up their software engineers or something like. You know.
No, let's not cause them harm.
Yeah, we pay good
feel
money
like
for
they-
this.
I feel like they purposely try to trick you.
They do.
They do.
It's
And
awful.
trick. So let's reframe this. Instead of saying they're trying to trick you, let's say they're trying to make you think deeply and consider it from different
that's
angles.
not it. They're just.
I'm trying to be positive.
I like the positivity, but that ain't it.
Okay, and then was there another problem someone had mentioned earlier to look at if we had time?
Yes, problem 7 on the quiz is another one of those tricky ones where they talk about not the cost of goods sold, but the cost of purchase,
Right.
which is rude.
It's not rude. I mean,
So it's going over like, what's the cost of purchases? So
right.
my question here on FIFO and LIFO, are you including the beginning inventory when you're subtracting out like what inventory was used for which, like in its order for sales?
So yeah, so
no?
this one isn't the one I was remembering with the cost of purchases. This one actually they're asking us for cost of goods sold. So yeah, in this case, so if it tells us we sold 5,430 units. So remember the first thing you have to decide is like, am I doing periodic inventory or perpetual inventory? And this one says they use a periodic inventory system. And the reason that matters is because with a perpetual inventory system, I'm sort of like, I'm recalculating each time I make a sale and doing like first in, first out from whatever units are available at the time of that sale. But in a periodic system, I'm not doing that, because in a periodic system, I don't keep track of those things throughout the period in a perpetual way. Instead, I just get to the end of the period, at the end of the time period, and I say, okay, if I sold 430 units, I must have sold with first in, first out, I must have sold the oldest 5,430 units. So starting with beginning inventory and working through chronologically the oldest 5,430. And so, so it is important to sort of identify first off, am I dealing with perpetual inventory system or a periodic inventory system?
Okay,
And
so
then
I got confused on the cost of purchases because I didn't know if I needed to just do a lump sum like we did for the weighted average. Like, this is how many purchases are all together equals
Yeah.
what, which it looks like that's what you did here.
yes.
But I didn't know if they were saying like, okay, add up FIFO wise, like do just the purchases from February 20th and then May 16th and then October 3rd and then whatever was left over from December 11th. Like I didn't know if it was only that segment. Does that make
Right.
sense?
Yeah,
With
and
its-
and
with
the
its
answer
value.
is no, right? With cost of goods, so what we're calculating here is cost of goods available for sale. And you'll notice that regardless of the method we're using, it's all the same. And so I think
Ah.
that's tricky because really the whole first in, first out, last in, first out weighted average, that's just our way of identifying or really making an estimate as to which units we actually sold and which units are actually still remaining in inventory at the end of the period. But as far as what the cost of all of our units was, that's going to be the same regardless of which system we're using. And so it's just that a lot of times they just have you do cost of goods available for sale as a single thing where you would just multiply these out and add them up, and that would give you.
Right.
But here they're having us do it in two steps, doing beginning inventory. So we multiply 670 times 1870 to get our beginning inventory. And
I guess
then
I didn't realize that they were going to be all the same across all three of them. Like all of FIFO is going to be the same, all LIFO and all of weighted average.
right.
I was thinking that we would have to figure out, well, all the things that we've been doing in the previous questions. So, okay, that actually solves my question.
Okay, good.
I don't know if anyone else had questions on that.
I need help on number 2. I might be dumb on this one though.
On the quiz or the quiz access?
Quiz.
Okay.
This one should be an easy one, but I got really I don't know, I just got really confused for some reason.
Okay. Yeah, so they want us to compute the cost of goods available for sale and the number of units available for sale. So we're just going to take like the number of units at their cost. So 140 at 75 and then 440 at 80, etc. And then just multiply those out.
Cost available.
Uh,
I got
right.
really because I got confused because it says there for specific identification. I thought it was asking me as like to do the specific identification. That's why I got confused.
Right. Yeah. And so this is another
Gotcha.
good example, like we looked at on what was it just now, number 6, where it doesn't matter what costing we're using for our inventory assumptions. The cost of goods available for sale is always going to be the same. In other words, what we're determining with those, with first in, first out, last in, first out, et cetera, is, well, what was the cost of the ones we sold, and what's the value of the ones, or not the value, the cost of the ones in ending inventory. So I think maybe, I mean, hopefully that's a good distinction, like to recognize, oh, because what's interesting is if you use first in, first out, or last in, first out, or specific identification, or weighted average, and you add up your cost of goods sold that you calculate, and you add up the value of remaining inventory with your cost of goods sold, it will always equal your cost of goods available for sale. And so even though the numbers will be different for first in, first out, and last in, first out, still the sum of your cost of goods sold and your remaining inventory will equal your cost of goods available for sale, regardless of which method you use. Because you can't, if you think about it, you can't sell more than what you have. So what you've sold plus what you have left over always equals the same amount, regardless of which assumption you use on which ones you're selling and which ones are left. All right. Any other questions? I mean, it's about 5:42.
It's not a question on any problems, but I was wondering, since the exam is next week, do you have any like tips or advice on like main concepts that we should really like grasp and understand?
Yeah, I think the main concepts are like chapter 5. No, just kidding. I know that's not funny. So I don't have any advice better than the study guide. In other words, the study guide lists out exactly the concepts. Now, it doesn't always do a good job of helping you know how it's going to be presented, does it? So you'll see it and you'll think you studied it and then be like, how am I still missing this? But I will tell you, let me pull up the study guide. I will tell you which ones maybe you'll see more questions of a certain type. Does that make sense? So give me a second to
Will
pull
we
that up.
will we see a question like question? Sorry, will we see a question like question 9 on the
No,
quiz? Okay.
thank goodness. That's kind of a bully question. Like that kid that takes your lunch money at school or whatever. That's that question, is that guy. Let me stop my share for a minute. I'm gonna pull up. Where are you
I
at?
do gotta get going, but thank you so much, Brother Fox.
No,
Really
thank you.
appreciate your time.
Okay. Let's see.
Did you get sunburned, Brother Fox?
Probably. I've been, like I said, we came up here for the week. My daughter is moving into a new home and decided before she moved in, it needed a new floor and it needed a new pantry built and it needed all those things. And so I've been out in and out of the house, cutting and building with her husband. It's been fun though. We did like bro bonding time.
Sounds fun. Is she in California too?
No, I'm in Arizona, and she's in Arizona too, but she's about 4 hours away. Big state.
That's right. I remember you said Arizona. I don't know why I was thinking California.
Sorry, it's taking me so long to find this, guys. Just another second here. I'm getting.
It's under your handy stuff on the.
I was looking within the, but yeah, good idea. I was looking in the.
Under the modules, I think it's like the second one down.
Yeah. Let's see. So exam 3. And I'll kind of go over a couple things that expect to see like more of. All right, let me share again. Or did I ever stop sharing?
Yeah, you stopped sharing.
Yeah. All right. So I'm like looking through this review. Like, like these questions distinguish between a multi-step and a single step income statement. Again, there'll probably be a question or two on that, but that's not going to be hit super heavy. Honestly, just recognize that if it has things like net sales, cost of goods sold, and gross profit, and then separates out operating income or income from operations from that's a multi-step versus a single step just has revenue and kind of lumps all the expenses together. Okay, you need to know how to compute net sales using the multi-step approach, so that net sales is your sales minus sales returns and allowances and sales discounts. Gross profit is sales minus cost of goods sold. Income from operations is your gross profit minus your operating expenses. So like that kind of stuff, again, those will each be like a question, you know what I mean? Like, or maybe two, but they're not gonna spend hours there. But this one right here, and here, gross margin ratio, profit margin ratio, again, maybe a question on each of those. But put to memory the following formula for computing total cost of goods available for sale and cost of goods sold. So that beginning inventory plus purchases plus any cost of freight or buying that inventory, okay, less purchase returns and allowances and less purchase discounts is going to give us our total cost of goods available for sale. And then less our ending inventory is going to give us our cost of goods sold. You need to be really familiar with it. It's going to, in some form, appear in multiple questions. And yeah, those tricky questions where they kind of hit it from the back or from the front, almost like I say, you got to like be able to know how to do it forward and backward. be prepared. That's going to be, 5 questions or something like that. Also, this one tells you to review the summary cheat sheet located at the end of chapter 4. Specifically on merchandising purchases on account. And so another thing that I think is really helpful for these chapters is, for me, I have to identify, and this is so much harder in a class than it is in real life, but I have to identify, in this transaction, am I fulfilling the role of a purchaser? I'm buying things from people. Or am I fulfilling the role of a seller? Am I selling things to people? In real life, you totally know the answer to that. But in these book problems, you have to like read the context clues, and sometimes it tells you, sometimes it's more like clues, which role you're fulfilling, because that's going to impact the other stuff. Things like closing accounts is still going to be an issue in this. You did that before, but they want to make sure that you recognize with merchandising companies, you have a couple of other, you have cost of goods sold, right? That expense account that you didn't have before. So they want to know that you recognize that's an expense account and needs to be sold. There's actually there's a couple questions, more than a couple, 2 or 3 or 4, on understanding like the terms, like the discount terms. 310 N60 means a 3% discount within 10 days. In fact, I think there's one like a definitional question about that, like what does this mean, 310 net whatever, and a couple others where they want you to compute the amount of the discount if they, and look out for a trick, right, that says, oh, they pay it off on this date. If it's after the discount period, then there'd be no discount. That seems like something they would do, doesn't it? And then a couple more.
They'd like to do it the right day, but the wrong month.
Right, to make you to force you to like notice those little details. And I know that seems unfair, but I will tell you, like, real accounting is totally about noticing those little details constantly. That's the nature of that kind of work. But again, I think it's harder in a classroom setting because we're reading a word problem rather than knowing just what's happening. And then in chapter 5, we get into periodic inventory. And again, the things that are going to get hit kind of heavy is, can you do all of these, compute cost of goods sold and ending inventory in a periodic system as opposed to a perpetual system? In other words, they want to make sure you know the difference between the two. Okay. And the difference is that in a perpetual system, we are updating whenever we make a sale, we're only selling from the inventory we have on hand at the moment of that sale. So if we're figuring out first in, first out, for example, we can only look at the inventory that we already have at the date of the sale. That's a perpetual system because it's keeping track as we go. Whereas in a periodic system, we're not keeping track as we go. So we're just at the end of the month looking back and saying it was the first units. So that's something that you're going to see multiple questions on. The FOB, origin or destination, right? Recognizing, again, am I the buyer or the seller? And when do I have ownership of the inventory? And when does that pass to the person I'm selling to? Or if I'm the buyer, when does it belong to the seller? And when do I take ownership of the stuff that's coming to me? Just remember, FOB origin means ownership passes from the buyer to the seller at the origin. In essence, when the seller loads it on the truck, it becomes the buyer's. And FOB destination, ownership doesn't pass until it gets to the destination. So the seller maintains ownership of it the whole time it's being transported, and then it becomes the buyer's when it shows up at their place. They want you to know the difference between those two, and there'll be a couple questions on that.
Does that determine who pays for the shipping costs?
Yes. Yeah, because the answer is the owner pays for the shipping costs, right? So if it's FOB FOB origin, or sometimes it's called FOB shipping point, then the buyer, because they're taking ownership of it, then they're going to pay for the cost of transport. And if it's FOB destination, then the seller pays for it because they own it all the way through. I mean, so that's a pretty quick exam review, but really I can't add too much more to what this is, other than to say maybe focus your efforts on those few things I mentioned, or focus your extra effort on those, because they're going to be multiple questions. I think we're getting close to out of time. And I do notice my son called me, so I want to call him back before I start my next class. Is there anything else before we can finish up? All right, thank you for taking the time to be here. And I hope it was a good use of your time. Can I get anyone to volunteer for a closing prayer?
Real quick, sorry. With percentage of total assets, if you're taking like an inventory of something, you would take that inventory and divide it by the total assets, right? To get a percentage of that.
I'm sorry, so the question was?
So if you have, if you're wanting to know the percentage of inventory out of total assets, you would take your total amount of inventory and divide that by the total assets, right?
Correct.
Okay. That's clarification on that, sorry.
Yeah, no problem. All right, anybody to offer a prayer?
I'm happy to pray.
Oh, thanks.
Our dear kind Heavenly Father, we're thankful for the opportunity we have to gather as a class tonight. We're thankful for Brother Fox and his help with our various questions and problems, and our seeking to understand the accounting that we're learning. Please help us, Father, that as we continue to work through these problems and continue to prepare for the exam next week, that we will remember the things that we've learned and studied, that as we put effort into memorizing the formulas and procedures, that we can remember them when it comes time to put it to work, and in our quizzes and our problems and our tests and exams. Father, we thank thee for our many blessings and pray that our families will be blessed as we continue to seek learning and education. And Brother Fox and his family will be blessed for his being here with us, and bless his daughter as they get ready to move to their new home. And these favors and blessings, Father, we pray for and say this in the name of Jesus Christ. Amen.
Amen. Thank you. And thanks for
Thank you,
the personal touch to that. Thank you very much. Have a great night,
welcome.
everybody.
Thank you.
Thank you.
Good luck with your daughter.
Thanks.